Global trade is the lifeblood of our modern world, connecting continents and cultures in ways that were unimaginable just a century ago. Every day, thousands of ships crisscross the oceans, forming a vast network that keeps our economies running and our societies supplied with the goods we rely on. These ships carry everything from the cars we drive and the clothes we wear, to electronics, food, and raw materials. The sheer scale of this operation is staggering. Over 80% of global trade by volume moves by sea, making shipping the backbone of international commerce. Key maritime canals like the Suez and Panama are vital shortcuts, allowing vessels to avoid long, perilous journeys around entire continents. These engineering marvels save ships weeks of travel time and millions of dollars in fuel and operating costs. The Suez Canal, slicing through the Egyptian desert, connects Europe and Asia, while the Panama Canal, carved through Central America, links the Atlantic and Pacific Oceans. Together, they form the arteries through which much of the world's trade flows. These canals are not just engineering feats, they are strategic assets that shape global trade patterns, influence the rise and fall of economies, and even affect international relations and diplomacy. A single container ship passing through these narrow channels can carry goods worth hundreds of millions of dollars. This is especially crucial for industries that depend on just-in-time manufacturing, where even a short delay can disrupt entire production lines and ripple through the global economy. However, our reliance on these narrow maritime choke points creates significant vulnerabilities. When traffic backs up or a single ship gets stuck, the consequences can be felt worldwide, from empty store shelves to rising prices. Disruptions, whether caused by accidents, political instability, or natural disasters, can delay billions of dollars in cargo, stranding goods at sea and causing cascading effects throughout the global supply chain. Recent events such as the high-profile blockage of the Suez Canal have highlighted just how fragile these routes can be. Such incidents have prompted governments and companies to rethink their strategies and search for alternative routes and solutions. The world's most important shipping lanes, once thought to be secure and reliable, are now recognized as potential points of failure. As global trade continues to grow, ensuring the resilience and security of these great shipping arteries has never been more critical. The Panama Canal, once a model of reliability and a symbol of human ingenuity, has long been the lifeblood of global maritime trade. For over a century, this engineering marvel has connected the Atlantic and Pacific Oceans, allowing ships to bypass the long and treacherous route around the southern tip of South America. Every year, thousands of vessels carrying everything from electronics to food pass through its locks, making it a critical artery for the world economy. But now, the canal faces an unprecedented crisis due to a severe and persistent drought. The region, once lush and reliably rainy, is experiencing some of the driest conditions in decades. Climate change has intensified weather patterns, leading to less rainfall and higher temperatures, which have dramatically reduced the water available to operate the canal's complex system of locks. Water levels in key reservoirs, such as Lake Gatun, have dropped to historic lows. These reservoirs are essential as they supply the millions of gallons of fresh water needed to lift and lower ships through the canal. With less water, the canal's operation has become increasingly difficult, forcing authorities to make tough decisions. The Panama Canal Authority has responded by reducing the number of ships allowed to transit each day. This has created a significant bottleneck, with vessels forced to wait days, or even weeks, for their turn to pass through. At times, over 200 ships have been delayed, anchored off the coast and waiting for passage. The ripple effects are felt worldwide, as these delays disrupt supply chains, slow the delivery of goods, and drive up shipping costs for businesses and consumers alike. This crisis has exposed just how vulnerable global supply chains are to environmental changes. Ports are seeing fewer containers, factories are waiting longer for raw materials, and retailers are struggling to keep shelves stocked. The world is learning a hard lesson about the risks of relying on a single climate-sensitive waterway. As a result, the search for alternatives to the Panama Canal has become urgent. Shipping companies and governments are scrambling to find new routes and strategies to keep goods moving efficiently. Some nations are exploring longer, more expensive detours, while others are investing in infrastructure to support alternative shipping lanes. The resilience of global trade now depends on the ability to adapt and diversify. The dream of building alternative routes across Central America, once seen as ambitious or unnecessary, is now viewed as an economic necessity. Surveyors and engineers are already mapping out potential sites for new canals or overland corridors. The race to create a rival to the Panama Canal has officially begun, with countries and corporations eager to invest in projects that could reshape the future of global shipping. In a rapidly changing world, the lesson is clear: the world can no longer rely solely on a single waterway. The future of global trade will depend on innovation, adaptation, and the ability to weather the storms, both literal and figurative, that lie ahead. China sees an opportunity amid the Panama Canal's limitations. Through its Belt and Road Initiative, China invests in global infrastructure to secure trade routes. Central America is strategically important for new shipping routes. By financing alternatives to the Panama Canal, China aims to diversify its shipping options. China's investment in Central America is both economic and geopolitical. Projects like a canal through Nicaragua and a corridor in Mexico are key. Chinese companies are central to these projects, reshaping the region's economic landscape. China's involvement signals a shift in global trade dynamics. Nicaragua's canal dream is revived with Chinese backing. A new route connects Bluefields on the Caribbean to Corinto on the Pacific. The project involves dredging Lake Managua for large ships. China's state-owned company KAMC is constructing the new port at Bluefields. For Nicaragua, this partnership could transform its economy. For China, it offers a strategic shipping route free from geopolitical rivals. The project faces engineering, financial, and environmental challenges. The Nicaraguan canal dream is alive, but obstacles remain. Mexico's alternative to the Panama Canal is a land bridge. The interoceanic corridor connects Salina Cruz on the Pacific to Coatzacoalcos on the Gulf. It involves upgraded railways, highways, and ports for efficient cargo transfer. Chinese companies are major investors in this project. The corridor offers a faster route for time-sensitive goods. It aligns with China's strategy of diverse trade routes. Significant progress has been made, with completion targeted for 2027. Mexico's land bridge is a pragmatic solution in the race to reshape shipping routes. Across Central America, 3 ambitious corridors are being developed, each offering a unique approach to the age-old challenge of connecting the Atlantic and Pacific Oceans. These projects, spanning Panama, Nicaragua, and Mexico, aim to reshape global trade by providing alternative routes for the world's shipping giants. Each corridor is designed to address the growing demands of international commerce, but they do so in distinctly different ways. The Panama Canal, a marvel of engineering and a symbol of global trade, has served as the primary passage for ships for over a century. Its system of locks and artificial lakes has enabled millions of vessels to bypass the long and treacherous route around South America. However, the canal faces increasing challenges, particularly from recurring droughts that threaten its water supply and limit the number of ships that can pass through each day. In response, Nicaragua has proposed its own canal, a massive infrastructure project designed to accommodate the world's largest ships, vessels too big for the Panama Canal. If completed, the Nicaragua Canal would not only provide redundancy for global shipping but also open up new opportunities for trade and economic development in the region. The project, however, faces significant environmental, financial, and political hurdles. Meanwhile, Mexico is taking a different approach with its land bridge across the Isthmus of Tehuantepec. Instead of a waterway, this corridor relies on modern railways and efficient ports to move containers quickly between oceans. By focusing on speed and streamlined logistics, Mexico aims to attract high-value, time-sensitive cargo that demands rapid delivery. Each of these projects brings its own set of advantages and challenges. The Panama Canal is tried and tested but increasingly constrained by environmental factors. Nicaragua's canal promises greater capacity but comes with high risks and uncertainties. Mexico's land bridge offers speed but may not be suitable for all types of cargo. Rather than competing directly, these corridors could work together, each serving a different segment of the shipping market. By complementing one another, they could help ensure the resilience and efficiency of global trade routes. For example, the Panama Canal may continue to handle medium-sized vessels, while the Nicaragua Canal, if built, could serve the largest supertankers. This would allow for a more balanced distribution of maritime traffic and reduce bottlenecks. Mexico's land bridge, on the other hand, could become the preferred route for express cargo, goods that need to move quickly and efficiently between continents, such as electronics, automotive parts, and perishable items. Ultimately, the success of these new projects will depend on their ability to offer clear advantages, whether in scale, speed, or reliability, over existing routes. The future of global shipping may well hinge on how these corridors adapt to changing demands. As the world's appetite for goods continues to grow, these new developments signal a bold new era for international trade, promising greater flexibility, resilience, and innovation in the global shipping landscape. New canals and corridors face immense financial and environmental challenges. The Nicaraguan Canal and Mexico's land bridge require massive investment. Environmental concerns include ecosystem disruption and pollution risks. Social and political obstacles include land disputes and security issues. The need for two massive canals is questioned, given Panama's potential solutions. Global trade growth must support these projects to avoid failure. Promoters are betting on a future of expanding trade and new shipping routes. The challenges are significant, but the potential rewards are great. Success in Nicaragua and Mexico could reshape global trade. New routes would reduce reliance on the Panama Canal. Competition could lower transit fees and improve services. Host countries would gain economic power and benefits. China's role in Central America would challenge U.S. dominance. Different cargo types might use different routes, enhancing resilience. The success of these projects is uncertain, facing many obstacles. The Panama Canal crisis shows the need for new trade arteries. Alternatives are gaining momentum, signaling a new shipping era. If successful, these projects will forever change global trade dynamics.